I discovered that Canadian banks were beginning to extend mortgage amortization periods on outstanding mortgages to help ease the pain of some Canadians facing higher interest rates and ongoing inflationary pressures. So now that the banks have reported their Q4 2023 results, I thought that I would go over some of the few points from their financials, look at how their mortgages by remaining amortization schedules are progressing, and have a quick discussion about the housing market. So looking at TD first, so they reported a 14% decline in Q4 adjusted EPS. And for fiscal year 2023, there was a 4% decline in adjusted EPS. Now, the provision for credit losses increased about 42% year over year, which were higher than analyst expectations. And for fiscal 2024, management provided the comments saying that they believe it will be challenging for the bank to meet its medium term adjusted EPS growth target range of 7 to 10% and return on equity target of 16% or greater than 16% due to elevated expenses, including investments to enhance risk and control infrastructure, as well as just for investments to accelerate growth. They also noted that further normalizations in provisions for credit losses are anticipated, which could make it hard to achieve those earnings targets. Now, the company has implemented a restructuring program, which is expected to generate approximately $400 million pre-tax in savings in fiscal 2024 and an annual run rate savings of approximately $600 million pre-tax. And the cost savings will be primarily driven by a 3% workforce reduction, as well as real estate optimization and asset impairments. And you'll see the common theme here. All of the banks that I covered actually increased their dividend. TD increased their dividend by 6.3% to $1.02 per share. Now, looking at the amortization schedule here for TD, we are seeing the number of mortgages with an amortization period of greater than 30 years come down to about 20% of all Canadian mortgages. Now, this is down from about 29% year over year if we compared it to October 2022. But again, just a reminder, there were zero mortgages which had an amortization of greater than 30 years in October of 2021. So while it is improving, if we compare it to 2 years ago when rates were significantly lower, we continue to see them elevated from the 2021 period. Looking at CIBC, they reported a 16% increase in Q4 adjusted EPS and about a 5% decline for fiscal year 2023. Their provision for credit losses increased 24%, which were actually below analyst expectations. But similar to TD, CIBC is guiding its medium-term 3 to 5 year adjusted EPS growth target range of 7 to 10% and return on equity target of 16% or greater. But unlike for TD, I looked through the conference call. I could not find any comments on the achievability of these targets. And they also increased their dividend 3.4% to 90 cents per share. And the amortization schedule. So they've also shown a slight improvement as well with mortgages with an amortization of greater than 30 years, now at 24% of their Canadian mortgages, which is down from about 30% year over year. Moving to RBC, they reported flat adjusted EPS for Q4. And for fiscal year 2023, adjusted EPS was actually up 2%. Now, provision for credit losses increased 89% year over year, which were above analyst expectations. And management made the comment that saying, we made progress on our cost reduction strategy, incurring bank-wide severance of $157 million and reducing all bank workforce by 1 to 2%, with the full run rate savings of $235 million to be realized starting next quarter, so starting Q1 of 2024. And like I was saying, RBC also increased their dividend by 2% to $1.38 per share. And like the other banks, we're also seeing improvement here with their mortgage, with remaining amortization, with about 23% of mortgages having a greater than 30-year amortization, which is down from 27% year over year. Now, I did touch on this when I did the segment last in August, so I will remove that from the screen first. Uh, but I'll briefly mention this. So the Financial Consumer Agency of Canada said 2/3 of mortgage holders in Canada are having trouble meeting their financial commitments. And as such, in July, the FCAC provided new guidelines for banks on how to deal with at-risk consumers dealing with financial stress, essentially with the aim of standardizing how lenders implement policies and procedures. So, seeing the slight improvement with each of the bank's mortgages by remaining amortization, these new guidelines may be helping banks from placing mortgage holders on greater than 30-year amortization periods. But that's just me speculating. And switching gears to the housing market. So, as you can see here, affordability declined further in the fall, driven by, of course, elevated rates and tight supply. And if we look at the chart here that I have up on the screen from National Bank, the median resident in Vancouver is paying 100% of their median income on their mortgage payment, while Toronto is slightly behind at approximately 85%, and Montreal and Calgary are more reasonable at about just a little bit above 40%. But again, housing is not affordable. And being someone that wants to purchase a home, I'm still feeling that, of course. Now, with elevated interest rates, lack of supply, and of course, like I just went over, horrible housing affordability, it is no surprise that we are seeing residential sales continue to pull back, with this chart up on the screen showing the seasonally adjusted residential sales at about 36,000 across Canada. And if we look at housing starts, they've actually shown some resiliency, especially within the multiple dwelling properties. But even in the commentary from National Bank, they noted that we will still need to see several months of these elevated housing starts before there will be any notable improvement on supply. And lastly, before I open it up to the guys here, I just wanted to briefly mention the new federal government tax measure coming into effect on January 1st, which will no longer allow Airbnb and VRBO or Verbo hosts to claim expenses against the income they make from their rentals. And Chrystia Freeland believes that this new measure could free up as many as 30,000 homes. Now, I am somewhat skeptical on whether it could and will free up 30,000 homes. There's also, another research report from the Conference Board of Canada think tank, which I saw, and they essentially concluded that the number of Airbnbs in Canada is too small to make a tangible dent in Canada's low housing stock. So will it help housing prices come down? I'm not sure. I guess we'll just have to wait and see. And with that long drawn out segment, I'll open it up to the gentleman.
I got nothing to say. Anybody
No,
got
I mean,
anything to say about
I'm
this?
always interested in hearing Brennan's take on the banking sector because he was the one that really brought my attention to how amortizations, the maturity of amortizations absolutely exploded post-COVID, right? We, quarter more of amortizations across the big banks being over 30 years. So, that's interesting.
Yeah, I did wonder if there's any color on why the higher rate, obviously, but reduction in the overall in the 30 plus years. Was there any color or commentary you saw on there?
Not that I saw. No, not that I saw.
I'm going to make a guess here that it's just has to do with mortgages renewing. Because
yeah, I mean that's
the banks,
thought, but
my understanding, are allowing the mortgage amortizations to be extended on variable mortgages beyond like the 30, 35 years, in some cases even indefinitely, but that's only for an existing mortgage. When you renew, you have to go back to the old rules, right? So as more of those mortgages renew, people are going to have to
I do wonder if that's going to cause some sales, right? Some sales. I wonder if that's going to cause some sales because there are some people. Yeah, I wonder if that will increase, and if that increases over the course of 2024, that might be a story.
I'm sure it will.
There are a lot of people kind of crossing their fingers that rates come down significantly, but you're not going back to sub 2%, in my opinion. And some people are facing 6, 7 plus right now. So, I mean, it's a big shock, and we'll see if that starts to creep into housing prices over the course of 2024.
I mean, in terms of Brennan's comments on the VRBO and the Airbnb, I don't really have a ton. I would agree with you, Brennan. I don't think it's going to make a dent. I think it's a Band-Aid solution. One of the biggest problems I see in a lot of the areas where the housing affordability is the worst, like in Ontario and British Columbia, is that it just doesn't pay to be a landlord. I mean, the restrictions are so onerous. Landlords can't raise the rents, even though their costs are going up. It's just, a lot of people just don't want to do it anymore. So, I mean, I know people that were in the rental business as landlords, and they've decided to just not be landlords any longer. Just not a good business proposition. So if they want people to rent their places, then they need to make sure that the structure incentivizes it.
Yeah, and it depends too on the city municipality. I can't spit it out. But because I was talking to one of a couple dads came on the Vegas trip with us, and one of them has an Airbnb or place that he rents out in Canmore. And he was saying that the zoning that he has in Canmore is a seasonal home, so he couldn't even live there full time if he wanted.
Mm-hmm.
So he's wondering if maybe it won't impact him because of the zoning. But again, I'm not sure. I think we'll get more clarity on January 1st. But he's a little worried that maybe prices are going to come down on his property there. But we'll see.
I will say as well, here in Calgary, I have seen just when I've been perusing real estate here, some are just directly advertised as Airbnb, as that's the selling proposition, not as a permanent place to live, as an investment opportunity. I think that's more what they're trying to crack down on, instead of like Brennan's friend's dad, seasonal, where it's some seasonal, they're renting out the room. That doesn't seem to be the target, but it's very unclear because they haven't actually stated the direct rules that they're implementing, which is the issue at this time.
Yeah, I think it's a hot button issue, and you can get political gains by putting out there and saying we're cracking down affordable housing, and whether it has any impact or not, I'm not sure it matters to the sitting government. I think it, trying to gain some political points,
and the budget will balance itself.